if you die, then the insurance company gets to keep all of it. You can access your cash later if you want. If you've got an emergency, you can cancel it, you can take your money. Anyways, one's irrevocable, the other one's not. They both provide lifetime income. So anyways, there's a case for both. I mean, hey there, I'm John Stevenson. Welcome to the Guaranteed Retirement Guy Show. I am hanging out here in the woods in Genoa, Nevada. Actually above Genoa, Nevada in the mountains. And I'm talking about annuities. And I want to talk about SPIAs and income riders and the disadvantages and also the pros and what you should be looking for. Just right out of the bag here, if you're looking at a SPIA, you got to realize that you are giving up control of your money. It's the classic annuity. You get lifetime income, you fully annuitize it, and if you die, then the insurance company gets to keep all of it. That's kind of the classic notion, and a lot of people, they weren't very happy with that. So along comes the income rider. Income riders give you guaranteed growth for income, sometimes roll-up rates of 7 or 8 or 9%. They give you withdrawal rates. They're contractual, they're guaranteed. You can turn on income whenever you want. And it's just like a SPIA or a DIA that are fully annuitized, except that you can access your cash later if you want. If you've got an emergency, you can cancel it. You can take your money. With a SPIA or a DIA or a QLAC, you can't do that. It's fully annuitized. So it's nice because a lot of people are like, man, I just don't like the idea of giving up $300,000 and never seeing it again. Like, what if something happens catastrophically? It'd be nice to know that I can access that, right? With an income rider, you can. Even after turning on income. You might turn on income for a few years and then decide, oh, I want my money back. Well, they'll charge you a surrender charge. You know, at that point, it might be 5%. But at least you get your money back. You can't do that with a SPIA or a DIA. Those are fully annuitized. They are irrevocable. Like, you can't change it. It's like basically using all your lumber at once. So, see this log here right behind me? It's down, it's done, right? You can never, you're done, right? You cut it down, build a house, whatever, you're done, right? But you got all these other trees behind me. I might just stick a straw and suck the sap out, right? The tree's still there. That's an income rider. An income rider is, it's guaranteed lifetime income. It allows you to have that stream, that sap, that income guaranteed for life, but you're not necessarily cutting down the tree. Like, you have access to that money. You still own the asset. You can still, if you got to take a 10% free withdrawal, most of these will allow you to do that. And you can do that without any surrender charges, right? If you want to cancel the policy, then you'll have surrender charges, but at least you have access to your money. Now, at some point with an income rider, if you've been taking income for 15, 20 years, most likely the money will be gone. At that point, there will be a point where the balance will be gone. You have to realize that. But when you're purchasing these products, you're purchasing a pension. You're really doing it with the intention to never turn it back in. I mean, life happens and sometimes you got to cancel things, you got to change things around. That's fine. That's why I prefer the income rider, because you have the flexibility. You have the flexibility to activate income now or 2 years or 5 years or 10 years. With a SPIA, you got to pick a date. That's it. The end. Anyways, one's irrevocable, the other one's not. They both provide lifetime income though. So anyways, there's a case for both. I mean, here's a reason to get a SPIA. Maybe you have a non-spouse, a partner that you live with, okay? You want to make sure that they're covered if you die. But since you're not legally married, you can't do a joint payout. So you can't get a joint payout with someone who is not your legal spouse with any of these options. But with a SPIA, you can actually do lifetime income like a single life, but also do a 30-year period certain. So it'll give you income for whichever is longer. If you live longer than 30 years, it'll give it to you for the rest of your life. If you live 20 years, then they'll continue that income for the next 10 years because it's got to be at least 30 years. So if you have like a partner who's not a legal spouse, that income would continue to them for the remainder of that 30-year period. That is a reason to get it. Okay, there are reasons to get these contracts, and that's why I sell both of them, because everyone's circumstance is different. See if I covered everything here. No, that's everything. All right. I have notes just because I want to make sure that I am covering some really, really key points that people need to know when they're looking for annuities. If you're looking for an annuity for yourself, I would recommend that you go to my website, johnstevenson.com, and go to my income rider calculator if you're looking for highest lifetime income, or check out the other calculators if you're looking for more fixed growth, or like the MIGAs, or maybe if you're looking for a SPIA or a DIA. I sell those all the time too. So it just depends on what you are looking for, what's best for you. I tell people to do that, and then if they're comfortable, there is a booking page on my website. You can book a Zoom meeting with me, and we will get on a call, and I'll show you my screen, and we'll talk, and I'll send you some PDFs so that you'll have the illustrations. I'm not going to try to sell you anything. I'm just going to educate you and show you, here's what these do, here's what this does, here's what I would recommend based off of what you're telling me. And then, yeah, if you feel comfortable at that point, afterwards, you can reach out to me and I'll help you set it up. That's what I do. I help people. I sell annuities and I service them and I set up the whole thing for you. But that is totally up to you, not me. Transparency is so, so important. That's why you should be seeing everything. If you got an advisor that's showing you one option or two or three, you better ask them to show you a lot more, and you better ask them where they're getting it, because it's really hard to know if it's the best. In my opinion, it's kind of like shopping for a house. If I'm looking for a house, I'm going to go to Zillow or a website that gives me MLS access, right? I want to see everything that's available. I don't want to just tell an agent what I need and have them send me some properties. I want to see for myself. I want to know. I want to comb through the area and know that I'm seeing everything, and then I can make a decision. Anyways, all right. Hope you enjoy the view. It really is beautiful out here. It smells great. And again, if you have questions, comment below. And please do click the like button. Make sure you subscribe and share it if you think other people could benefit from it. So I really do appreciate you for watching, and we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.